Hi everyone. Hope everyone is enjoying the long weekend away from the markets. What I wanted to do this week is something a little bit different. Before I switch over and walk through the analysis in what we're seeing in the markets on a technical level, I think it's very, very important that I share with you the work that has been sent out to our clients this week. Now, the reason I want to share that work with you is because I know that with the declines that we've seen in the market over the last few days, there's a lot of anxiety, a lot of distress, because I think everybody's thinking that we're going back to the crash and this is the next big crash. So what I wanted to do is just kind of put a little bit of perspective on things, and I hope you get some insight from this. For those of you that are maybe new to my work got a lot of attention a few months ago, 6 months ago, because prior to the crash, I was using exactly the same techniques as what I'm using with this analysis that I'm about to share with you. And it enabled the majority of my clients to get defensive ahead of the crash, which has then since enabled a massive outperformance. And that's something that obviously, I'm incredibly proud of. But again, I know that it can help some people out there who maybe don't have the understanding of technical analysis, how to read the market, etc. Now, what I would say is nobody can predict a crash, nobody can predict a correction, but there are certain things to look out for that enables us to get defensive, and that's what I'm doing with this analysis, is just showing you the key levels where if we close below these levels, that might warrant a scenario where you might want to start planning out a defensive course of action. Again, not causing any alarm or anything, hopefully, but I just want to put some perspective, and I think it'll be well worth the 5 minutes of your time watching the analysis. And so let's dive into the charts. Let's see what the overall market is telling us and what we can expect, hopefully, over the next week or so. Hi everyone. Super interesting day, I think, for most of us. I'm assuming quite stressful for many of you that are naturally heavily invested in a lot of momentum growth names, etc. In fact, not necessarily momentum growth names. I think most names, if you're fully invested in the market, today probably wasn't a good day. But something that I wanted to get out, I've been inundated with private messages today. So rather than address every one of them, which is essentially asking the same thing, I'm just going to put together this 2-minute analysis, just clarifying what I'm seeing in the market and where, in my opinion, the real danger is. We know when we look back, when we look left on the charts, and actually the market crash comes to everybody's mind. And this is something that I've talked about, and those of you that have been with me over the years, and those of you that joined prior to the crash, you'll all understand the failed breakout and how it has such a big impact when we have failed breakouts in the major indices across the world. So there's a few that I just wanted to highlight to you, because, like I said, I think we all understand that the drop that we've seen today, 4 or 5%, is really a drop in the ocean now. At the moment, I'm not saying that we're going to correct. I'm not saying we're going to crash. I think we're still, as it currently stands at the moment, on the 3rd of September, an hour after the market close, I think it's still a dip that will be ultimately bought up, but I'm not going to be buying it tomorrow. I am going to be waiting until we get the holiday on Monday out the way. For me, tomorrow is going to be an observation day. I'm not going to be participating in the market, and here's why. Now, this is the All Country World Index ETF, ACWI. I think we're flirting very, very close to a failed breakout here. Now, hopefully, we get a rally Friday, next Tuesday, and this resolves itself. But again, just understanding where the blind spots are. The Russell 2000 as well, again, we have to be conscious about these levels. This is the weekly chart for the Russell. I wanted to condense the data here. And I think with failed breakouts, we all know the saying, with failed breakouts, you get fast moves going the opposite direction. It's something that I touched on and I've been touching on over the last few weeks. It was a major component of a decision making that got most of you defensive ahead of the market crash. I don't know about anybody else. I'm not against another market meltdown. I was 2 months late to the party after the last one, and I would not mind another bite at that. But again, that's just my own personal view. So I think this is a level that we have to be very, very conscious of. Something else I think is important is the Dow Jones Industrial Average. We know the S&P 500 is broken out, but the Dow hasn't confirmed with that. We like to see these both break out together from a technical perspective. So again, I'm just mapping out on the charts where I think if we get these breakdowns, and we know there's always one index that gets the party started. I highlighted it back before the market crash. I think that the Russell 2000 is an important chart. We know that volatility is spiking. We've seen something similar. It was a little bit of a false drop, if you like. I think the market dropped, I think it was 7 or 8%. But we've seen a spike in volatility. Now, at the time when this went out, I had to do another similar analysis. But again, it's very difficult to be completely bearish on the market when we've got the S&P 500 breaking out. At the end of the day, it's only one red day in the market. I'm trying to kind of put perspective on it. Yes, again, I'll highlight the failed breakouts for those of you that have only been watching or looking at the PDFs and not been watching the video analysis over the last couple of weeks. This would be a potential issue. And again, I think we've still got a ways to go. I think if it breaks below 340, then that again would be a problem. But like I said, we had this 8% drop back in June. So for me, you know, we're kind of looking like that. It kind of has similar characteristics in my view, and that's why I think that the dip will ultimately be bought. Yes, there are a couple of headaches. I need to communicate it. Obviously, you know, it's a charting service, so I need to communicate the charts. The S&P 500 equal weighted index, again, hasn't confirmed the breakout in the S&P 500. So again, that's something that I'm obviously conscious of. But one of the reasons that we still have to be bullish tech is we're still trading above the 20 period simple moving average. Again, highlighted this level in here in the halftime last night, and I don't think we certainly anticipated the massive sell-off. I think we were probably expecting a little bit of a dip, but maybe expecting it to be a gradual dip, you know, 1% a day, 1.5% a day, to have, you know, a huge drop like we've seen today. It obviously, you know, creates bigger question marks, warning signals, etc. So that's something that we have to be again conscious of. RSI is still in a bullish regime. So again, I think although we've got a dip here, I do think the dip will be bought, but I'm not going to be buying the dip tomorrow because I'm just not 100% convinced yet. I just want to see some sort of signal, and I think the market's probably going to give us the signal tomorrow. I'm sure some of you are going to jump in. I know some of you have already started buying up many of the discounts. I hope it works out. But I've just got my eye on the major indices because I am slightly concerned about potential failed breakdowns. And we've also got the German DAX as well. And again, the German DAX hasn't confirmed a breakout in the S&P 500. and it's a really, really important chart for Europe. So that's my thoughts on the market, everyone. I know it's been a very, very frustrating day. I know most positions have been stopped out. I know there's some of you that obviously have the investing mindset and dollar cost averaging, etc. But this is what I'm seeing with the technical side of things. And if anybody has any questions on it, feel free to reach out to me. Like I said, I'm probably going to take a day away from the markets tomorrow. Again, one of the reasons for that is, when you're stopped out of, a number of positions, I don't want to get into the mindset of just, let's get back in and, let's recoup that profit, etc. I'm more than comfortable just taking the day away from the markets. But I will be at my laptop, so feel free to reach out to me. But enjoy your evening, everyone, and I'll pick up with you all very, very soon.